Hello everybody, this is David Blair, the Crosshairs Trader. What I want to talk about today is 50-50 at the 50. Today is July the 13th, 2011. What we've got going on in the market is we have a consolidation that has been going on since roughly March or so of this year, so for several months. And during that consolidation, we've had a move to the highs on the ES here at the end of April, beginning of May, after we had a low set in February and then the middle of March. And then we hit those lows again all during the month of June. Over and over again, we hammered out a bottom. And then we broke out of this tight consolidation and pretty much went straight back up without a rest to the top of the consolidation again. Now, because of the length of our consolidation for several months, our 50-period moving average, which was sloping higher during the trend, is now going sideways. And as long as the price continues to move from high to low, without much direction, the 50 will continue to go sideways. What is interesting is within this consolidation, the 50 is pretty much at the midpoint between the highs and the lows. So we are, if you're a fib trader, I'm not one. I'm going to assume that we're at a 50% retracement here. And again, I'm not a fib trader, so I don't know that for sure. All I do know is we're back to the halfway point, which is our 50-period moving average. And you can see the last couple of days we have been fighting right around our 50-period moving average. We dropped below it yesterday, closed above it even though we were down for the day. Today we rallied higher off of it, only to give back most of the gains by the end of the day. So we've got a lot of fighting going on in this area around the 50. Okay, there's a couple of things going on here that I want you to pay attention to. First of all, we've had a trend down, which was broken. We headed back up, and usually with a rally this strong, you're going to have a pullback. We've had a pullback, a steep pullback, again back to the 50. So we're in an area right now that I think will tell the tale going forward over the next few weeks. Either we're going to stabilize here, which will be above another moving average from our weekly chart. This is our dotted lines here. I have the weekly moving averages superimposed upon my daily chart. We're sitting at the 50 and a major moving average on the weekly. We're sitting there. We're either going to stabilize in this area and consider this a pullback, and then start moving back up and possibly break out to new highs, or we're going to pause in this area, drop below these moving averages, and then head back down toward the bottom. We're not going to stay in this area very long. The market's not going to allow us to stay in a tight range for very long. We're going to move one way or the other. We crosshairs traders have many stocks currently set up to move higher if the market will allow them to. And what I mean by that is we need to start seeing some stability here in this area. If so, we can start moving back up toward our nearer term resistance area. And then once we break this area, break out with our longer term resistance. So we'll go up, pause, hopefully have a refreshment in here, get up some strength, and then forcefully break out. Or we can go ahead and break out, pull back, find what was resistance to become support, and then move higher. Okay, so let me review for the upside. Again, we're right in between resistance and support, which happens to be the 50-period moving average on our daily chart. We've had a move up, we've pulled back to the 50. Now we're looking to see if we can stabilize in this area, have a push up to the 1330 area, which has been a previous area of resistance. If we can push up here, pause, continue higher to our ultimate resistance that we found in April, pause again, refresh again, and then scoot higher. Or we may simply ignore this shorter term resistance area, scoot higher, pull back, relax, test, and then move higher. And then we've got a lot of stocks that are doing the same thing. They've either busted out higher, pulling back to test, or they're right below a resistance area themselves, resting, waiting to break out with the market. Okay, that's the bullish scenario. The bearish scenario, again, back at our halfway point, is that we hold in this area as a breather for the downside, and then we begin to move lower again and head back down to this possible support area, which was resistance. Pause again and head back down to the ultimate support area. So we've got this area we need to watch for the upside, and we have this area to watch for the downside. Upside between 1330 and, let's say, basically 1360. Downside between 1290 and 1258. Those are the scenarios. For bearish trades, we have several trades that are setting up that are again sitting at a support area waiting to break through, or have broken through a support area and now looking to pull back with support becoming resistance and then turn down again. I recently did a post and a video on general market correlation with individual stocks, and that's why I'm talking about several stocks are set up to go down if the market decides to go down at this 50-50 juncture, and we have several stocks that are set up to go up if the market decides this is a support area at the 50-50 and will continue to rise. Since this trend has been broken, a new one has started, we're pulling back, and we need this trend to continue here. Okay? If you've got any questions or comments, please contact me at david@thecroshairstrader.com. I would love to entertain any of your questions or comments. Have a wonderful day.